Good morning, traders. This is Alex with the Stock Matrix program. I'm going to do a commodity review, kind of off topic a bit, kind of my old roots. I'm just going to go through some grain markets chart, kind of a WD Gann thing, so people understand what you see sometimes isn't what you get when you're looking at a chart. Again, stocks don't have any deliveries in months and crap to deal with, but in the commodity world, you got carrying charge, you got deliveries, you got all kinds of stuff you got to control when you're trading. So kind of important not to get too wrapped up in it, but it does affect how you look at the chart, and that's kind of what we're going to go through here today. This is my X account, and I'll post what I put up here on this. It handles CBOT Man 33, and I do the stock matrix stuff. I also did commodities. I do the same thing that I do with the stock matrix, but on commodities, and you can review that here on the X account. Same kind of charts. I do everything similar, right? That's what makes one successful is duplication, right? You want to be able to duplicate it. Just like McDonald's. Why is McDonald's successful? Because they duplicate everything down to the napkins and how they fold them. So that's the same way when I trade. I try to keep everything similar. It's not foreign to me. So anyway, that's the X account, and you can review it. And like I said, I'll post whatever we have here, at least some of it, on there for you to review. I'm going to go with corn initially here. This is the daily spot chart. Now, again, there's different months. Corn trades March, May, July, September, December. So those are the months you always got to be on. They don't have October or June, right? So again, you got to roll. So the spot chart always looks a little different than some of the others. Now here's the daily chart, and you can see just like on my stock matrix, I post the solar eclipses, and I also post the trend lines from close to close, and you can see they do work, right? It's something that I always do. Again, that's a deep undercover Gann thing that I kind of broke out of some of his material. I don't know why he just didn't come out and say it, but of course there wasn't that many things to trade back then. There was just corn and cotton and a few stocks. So I mean, it wasn't like nowadays where you can trade a zillion different things. And you can see that the solar eclipse from the close, we're kind of back to it here as of May 20th, including the night session here. But it was 31 days. Now, again, if you follow me, the matrix is 66, right? 33 is half. So let's get a visual on this doubling. So June 27th will double the solar eclipse, which is a starting point, right? The 0 day, the inertia, the initial. You can't count from 1. You got to start at 0. This is the 0 day. And now sometimes it isn't a low. Now it happened to, a little more in commodities than maybe stocks, but it all works the same. It's just a counting point for me. And 33 was halfway. Now, for future reference, June 27th will complete the matrix, almost, right? Now 33 will be there. It's 33 bars from this point to that point, 66 bars from here. Now 33 is normally a buy, which it was, so I'm kind of friendly into the June period, at least based on this. Now we got to clear the solar eclipse first. But that's just kind of a quick little summary of the solar eclipse, and you can go back and maybe pause this and look at it. You can see that from close to close, it does, it projects pretty good, at least levels of support and resistance, and also parallel channels, which I didn't put on here, right? So let me give you an example. This solar eclipse close, I believe, is this one. Let me change colors here. So now again, it should be kind of random, right? And you can see that the speeds kind of line up, right? So now it did go through it by a click on that low day, the gap day, the weird day. But again, why, right? So now it doesn't just stop there. It'll continue even past history. So again, it's kind of important to know that, at least in my book. Let me go back, put it back the way it was so I don't screw it up. Oops, dang it. So anyway, that's a quick little lesson there. I don't want to get too deep into that. But all right, now I want to kind of explain the spot chart versus the others. Let me set that up. Now this is the spot weekly, so it gives you some data. Here's the big bear market in the 2000s that kind of just hung forever and then finally broke out. Now again, different than cryptos or anything else, right? Commodities tend to have long drawn out bears. Here was another one. You definitely had to change your mantra of trading, and you got to know the history of everything you trade. That's why studying these past markets gives you understanding. Now we did stay up here quite a while as well, right? So for every action, there's an equal but opposite reaction, right? So that's Newton's law. I believe in that. I trade by it. Now I don't believe in Newton, but I do like that law. It makes sense to me. It's like a spring. When you pull the spring, you let go of the spring. It has the same reaction every time, and it doesn't quit vibrating until the energy is expelled. So, and then a new force has to come into the market to pull, push, whichever way your spring goes, right? So that's the same way with the markets. So, once you get a period of rest, then it takes another force, and usually the governments play a role in that, right? Government stupidity, trying to control the things. So, once the government gets involved, it creates the bull and the bears both. But anyway, here is the the spot weekly. Now we're in the July month, right? Because May is done now. So this is the next month is July. I pulled up a side-by-side from the July weekly. So again, it's different, right? Because again, you can see, sometimes if the lows or highs are in a different month than July or May, it doesn't show it, right? And you can see here that it's pretty similar. Now this high is different. I was caused in April 29th. That's a big deal. I know it doesn't sound like much here, but there is also April 29th, and this low occurred on August 30th. Now you can see the low on the July is totally different because, again, the lows were created on the spot chart, I'm guessing in the December or probably the September contract, or probably DC, either one. So you can see that the July weekly, again, this is a July weekly continuation, so it's July only. So now again, July trades 3 years out in the future, just to add a little extra crunch in your cereal. So anyway, again, I'll also let me pull up the December now. This is the December contract, a weekly, just these, not just 1 year out. So again, it's totally different, right? Here's the high. This high was on April 29th. This high was in May. So it's a big deal. I know a month off doesn't sound like much, but when you're doing chart work, it's tremendously different. Now let's go back to these lows. Here's 2000, and you can see the spot low and the July chart we looked at were all the same. It was April. Well, and then it had a pivot. This is the important pivot. And then we had the secondary event, which is important as well. Now, why the secondary event's always important? Because look, the actual low came in August on the Dees chart. Now, it didn't make a new low, didn't have a trap, but it definitely crept down, right? Making this chart look extremely bearish, but this chart was actually looking kind of friendly. So now again, people were trading the Dees chart in August, and so they were probably pretty bearish and selling shit, right? So again, that's why it's important to understand those rollover contracts and the effect they have. Everybody was in Dees. The spot was already done, or the July was done, and May was done, and Sep was the lead month, right? But Dees is your big trading month. And so you can see that it finally broke out. The breakout period wasn't the same either, right? For those that are swing trading, it didn't make a new high on the spot chart until, January, almost February. So where it made a new breakout here. So again, it's kind of important, right? You don't want to get too caught up, and you got to look at the history of the stuff to understand where you're at. And then you get to the highs, right? These were the April 22nd highs in corn at over $8. But the high in the Dees weekly continuation wasn't until May. Now again, that doesn't sound like much, but that's a huge deal because people get stopped out thinking, oh shit, I gotta have stops in. It's probably gonna go to the moon. It's gonna go to $12. Or you know how it is. You get all wound up. I'm spreading this out a little bit so you can see. And you can see that as it goes down, it's just different, right? Now you're into the Dees period, so you're into the deliveries. So it changes up obviously pretty much because then you roll into the next December, and it keeps going down. Now here's your one of your hard pivots on March. Now here it was kind of a double bottom on the Dees chart, right? Then it had a little pop up, and then this pivot was pretty key, which May, and then kapoof down into August. Now these lows tied up because the spot low, that was September, December. So anyway, made sense that these lows do gel up. So anyway, just to understand why things do what they do, right? Now let's just, let me pull this off to the side and pull up the other one. We'll do a side-by-side of Dees in July just to kind of really get you going here. Whoop, let me spread this out right. So again, if you're doing Gann squares, if you're doing master chart stuff, it's important to get the exact date, right? Now, which one's more important? I always assume it's the furthest right. That's kind of my theory, and that's how I trade. Now, to me, the most important timing is the middle, right? So if you have 3, it's the middle one. Now, I also think pivots, like see this pivot here? Now, again, it's changes here, so it's a little different, right? But again, these pivots to me are the most important dates because that's your breakout. That's your last hurrah kind of deal. I call it the typical traps. People get all wound up. Oh, we're going to the moon, and then poof, it makes a new low, right? So now, again, that sets up everything. Now, you can see here that July did make a new low, and the Dees did not. So, again, knowing the charts is pretty key, and understanding which one of these are the most important. See, that's why the further right you go, this is August 14th, and that's August 14th is this little bitty swing here on the freaking July chart. because again, it's a new contract that's out, 8 months out in the future. So this is more current. So, but anyway, you look at the chart. That's why it's always tricky to understand everything. Now, I always like to stay in the front best I can, understanding weather is a main play in the grains. So, you want to stay where the weather's active. Now, of course, South America is becoming more and more of a big deal, which back in the day it wasn't. Back in here, South America, no one could give a crap. I'm going to update my chart live here. This is my matrix chart. Now, again, I do the stock matrix as well. Similar. Again, commodities are so much faster that you can't trade a quarterly moon actively and not get killed, or leave so much on the table that it feels stupid. So I use a daily. I use 3-box method, same as the stock matrix. But let's go ahead and update this. I'm a couple days behind. So the low is 443. 443. And again, I put the actual month in there, so you know. The high is 449 3/4. So similar range last 3 times. And it closed at 447.5. Now again, I put the close here because the trend is down. Now you can see the stop, was here. Now it's still here, right? So I'm going to do this live, just so you understand how I chart it on a spreadsheet. Now, why do I chart it on a spreadsheet? I used to chart it by hand, for Christ's sakes. I've been doing this for 4 decades. But I like to I get a feel a little bit for the market, and it gives me an understanding of, when a market gets overdone. I don't know. I just like it. I'm not a millennial for sure. I'm the old guard. Okay, so let's update the last day here, which is today. This is current right now. The day markets don't open yet, but they've been trading at night since in the evening. Come it. Low is 444. Oops. And the high tonight so far today, 454. So you obviously can see we have just broke out. So that now the stop got hit, and now it's down here. And tomorrow I'll move it over, so the stop will remain here. So again, it's a 3-box method, similar to the other deal. Now here's the matrix chart that you're used to seeing. With the quarter moons, I do the same exact thing. Now these are acceleration points for me. So I'm going to go ahead and pull that out of the screen and just update that. Now again, the quarter moon ended on the 16th. So we got 442 and 4. Dang phone. 454 3/4. So you can see it's nothing on the quarter moon chart because it's a more longer data. Now you can see that the corn was 180 degrees on your Gann wheel, which was from low to high. And from the high to now is 45 market days. We square the range, again, a Gann thing, next moon period, June 9th. So now again, if it makes a new high, this doesn't really matter, right? Because you have to redo it. But that's how I do it, similar to the stock matrix chart. Actually, it's identical, but I trade on the daily. So again, because it's too fast. I don't feel like risking 5%. So anyway, now of course the system is now long. Well, let's just go ahead and update my portfolio page. Now these are what I send to my old customers. I still do it because that's what I like to do. I'm a chart guy, right? Whether they trade on or not, or like you, it's up to you, right? It's your prerogative. I don't give a crap. But now today's date is May 20th, 25, and now we are long at 451 3/4. And now the stop is at 441. Again, it's repetitive, right? I do this with all the markets that I trade. So that's just that's how I roll. So anyway, that's just as a nutshell. Now there's acceleration points that I still chart when, again, that's these quarter moon things. I call them acceleration points, and I keep a page for those. So the customers that maybe aren't trading, the ones that I have, I got S&P, I got cattle and Bitcoin and silver, stuff like that, right? So it's a little more expansive, but I don't trade that on a system basis because it's too much margin. 86,000 bucks if you traded everything, not counting the Bitcoin, of course. But so I try to keep it around 50 grand. That's just kind of now it used to be a lot cheaper than that, but it's really, margins have gone up with the expansion of the pricing. So anyway, that's a quick little lesson on how I do it. So, and now it's, you can see I keep track of the winners. Here's the trade we just changed. Here's my, when I push that button, I've got it set up so it automatically dumps into that corresponding thing. So you can see I've had 2 trades. Oh, I guess I haven't updated yet. Hang on. Let's do that. Let's finish it. Let's get her done. Nope, that was 4. Dang it. Hang on. I wasn't right. 451 and 3/4 is where we got out. So you can see that we've had 2 winners so far this quarter. Now I ended in the quarterlies, and I've got 3 trades so far. So I charge, you know, $60 per commission or expenses or whatever. So again, try to keep it real, right? Now again, this is all fictitious unless somebody's actually trading it. So as long as you understand that, you can see corn's kind of a dud. Let's go to one that's been pretty active, like crude or gold. You can see, you know, $3 grand hit, 1,500, made 17 grand, had 2 losers in a row, you know, totaling about 9 grand. You can see the last quarter, gold made 20 grand, 12 grand the quarter before. A lot of trades, lost 3 grand. So again, that's an active market though, right? It makes a little sense. And I also trade the spreads. July no spread, which I'll be rolling. Let's go to the S&P since that's been a vertical dog. Yeah, you know, it's just a profit maker all the time. 25, 23 grand, 16 grand. It's up 9 grand for this quarter, and it had a big loser on the spin job, but now it's long with a pretty big profit. So again, I trade the same, right, as the stock matrix. The commodity matrix is a little different because of the speed. And to be honest with you, the fast as these some of these stocks are slinging, you know, I left a lot on the table on that low on the stocks, you know, because again, I'm following the system. And in my gut, I knew I needed to speed it up. But you know, as the system goes, I don't want to change it in the middle. That kind of, you know, I just want to see the end results after a year, right? So after a year, I'm going to quit doing it. Hopefully by then, for you guys that are following, you learn. Oh, again, if you're a new listener, go back to the stock matrix, all the postings on YouTube, and you can at least get a lesson. Again, I'm trying to do this to teach you how to trade systematically in your, even in your mind. I don't care if you're trading the Mercury rotations or whatever your cup of tea is, right? Whether you're trading, you know, I've traded everything from moving averages, stochastics to, I mean, I've got it all on the charts. I mean, I can pull up. Here's July corn. I mean, I can pull up everything you want to do. I mean, here's everything, you know, just the simple little stuff. And then you can create your own. I mean, then there's other, I mean, I got a zillion different things. I could unbalanced volume, you know, what's that? I have no idea. But there's so much stuff that people get, whatever it is, right, that your flavor is. You got to go through each market that you're trading and understand the results. And, you know, because it's going to be different every time, right? I mean, you want to make sure you understand how the market that you're interested in, the chart, reacts to whatever you're doing. You know, is it the secondary event that a guy should trade? You know, not the first one. You know, that kind of thing. Whatever it is, and then create a simple no more than 5 rules, and then stick with it. And your success rate goes up dramatically. Keeps you out from guessing. Now, of course, a lot of people are bull only, especially in the stock market. Again, I come from the commodity world, so I made more money selling it than I did buying it. So I just try to make money. I don't care. And that's why the options work for me on the stocks, because again, it's for some reason hard. You gotta have a margin account, and you know, but you don't have to when you're doing the puts, right? Because you're buying the puts and then selling them out. So anyway, that's why the options work real well. I do also trade a lot of options on the commodities, weekly options, you know, because I'm a time guy. I'm time specific. Everything I do is time related. So I know, you know, when we're 33 days over from the solar eclipse, I'm watching it like a hawk, see if there's anything I can trade, or just simple stuff. Anyway, I will let you go. I just wanted to show you kind of a different vantage point and actually how to do it. Again, this is what I do. You know, if you know how to create a spreadsheet, there's a lot of stuff that you can create. Again, my charts on here's the sugar again. The quarter moons are the time, and the square of price is the price. The square of 9 is the price. So it's similar. It's exact to the stock matrix, just different pricing. So again, you can speed it up or slow it down. Sometimes I need to go faster. I have to redo the whole damn chart. Like the S&P is kind of off the bottom of the page, and here is euros had a pretty good run. Now, obviously, gold has been crazy, and again, you see I haven't updated that here, but you can see here's the moon chart. It's just a crazy deal. It's way off the chart. I really need to redo it, and then because then I get stopped out and stopped in less. I leave more on the table more. So when you change the speed, there's a consequence. If you know don't pay much in commission or charging, you know, sometimes with no fees, you're better off trading a little quicker. Now, if you have fees, it's part of your process to understand that you don't want to have the fees eat up your. Yeah, I've traded stochastics. I went back 20 some years on stochastics, trading on a systematic on the corn as an example, and I made money. But by the time I took out commissions, I broke even. Again, it should be a zero-sum game, right? It's an average. Everything you do is a zero-sum game. So all you have to do is, you know, figure out a way to beat that just by a little bit, right? So again, it's like in Vegas, right? Vegas is odds is in your favor. If you can find something that gives you one little 51% in your favor, over time you're going to make money. It's the same thing in commodities in a systematic approach. Now again, there's no emotion, so I always feel if you're too emotional in the market, you don't trade it. Go trade the Zimbabwe dollar. I don't know, whatever, right? Trade the gold or trade steel rerod in Dubai. I mean, whatever, right? I don't know. There's so many different markets you can trade. If you get too emotional in one, don't trade it. All right, I'm rambling. Thank you. Have a great rest of your week.